Welcome to Winning Wall Street's Money. Please take this moment now with helping me. Click here, subscribe. Next, click this bell. Next, ensure to click all. This helps you receive a notification when I posted my next videos. Next, click this thumbs up button after every time you watch my video. This pushes it up in the engagement ratings and means it will be suggested to more people, therefore is likely to get more views to my YouTube channel. I really appreciate that. I also have a Patreon page. Click show more. Scroll down. This link here, my Patreon, click on it. Select the membership. With this membership, you'll get access to all this information. Very good content. Saturday, May 1st, 10:50 a.m. New York time. The end of April. Commodities all priced in the US dollar. So first we'll look at the US dollar. When the US dollar declines, that typically has commodity prices increase. So for the current month, the US dollar declined. The high was here and the low was there, and we closed here. So we closed below the close of the prior month. So that makes the dollar lower. Let's see how the commodity prices fared. And just take note here, it's in a consolidation the past 2 months, coming off the lows where the prior trend was down. And if you think this is going to be, a consolidation a little bit more, and eventually a breakdown to go lower, then again, you expect to see the commodity prices increase. As well as the economies open up more nations, you're having more demand on products. That leads to prices higher as well too. We'll first look at the energy sector. Includes the crude oil, natural gas, and others. So looking at the crude oil for the month, made a yellow candle. That means inside candle. Similar to the US dollar, both months side by side of consolidation. Inside candle, yellow candle, I have programmed. That means the high and low do not go above or below the prior month. It's undecided what it wants to do. But the prior trend is up. So one would expect, probability is that we're going to continue going higher. And as we come sooner to hurricane season in the Atlantic Ocean, you might see oil platforms get shut down temporarily. That doesn't mean there's a less demand of crude oil. You still have that same demand or more. That could also temporarily bring prices up. Yep. And notice also this was a supply zone, this red horizontal line, and this yellow line was a swing high. Prior month we came into that, rejected that, sold off, but we didn't take out the low of that prior month. So again, bullish bias still on crude oil. Onto natural gas. For the month, we made a higher high, higher low than the prior month. This green area is a demand zone. Buyers stepped in there, and a lot of whipsaw over the past several months. But besides, between that price level 250 and 350, so it's building momentum for calls to break out, and the probability is to go higher. So the opportunity is, if you retest this area, to look to reload to be in the long position. Let's look at the metals. First, gold. Made a higher high, higher low than the prior month. Coming into a demand zone and rejecting it, which is around that 1800 level. but still made a reverse than the prior month. So expect this trend to continue higher. And silver, look at that inside candle, indecision. A lot of whipsaw over the past few months. Tighter range here, building a call is going to break out one way or the other. The probability is once it breaks out this bigger momentum, you may see higher prices. So you may see more whipsaw, testing this prior demand zone again, or selling off at this supply zone. But once it breaks out of this big consolidation, expect the prices to be higher. So there are opportunities here to reload, to buy if you're bullish. Platinum, yep, the momentum's still up. So for this year, we're still above the high of last year. Big demand on platinum. And copper, big demand on copper. All-time high over the past 5 years. Again, each of these candles is a month, and this is a 5-year duration. Huge demand on copper. Yep, copper used for industrial use, appliances, communication lines, many industrial uses. So as the world grows bigger, we have more demand for electronics that require copper. There's only so much copper on the planet. What do you expect until you have a new technology that supersedes it? That might cost less money. See what time or so. Let's go on to the next commodities. The agricultural. Yep. First look at corn futures, all-time high for the past 5 years. Look at that. It traded above $700 and then it went back around the 650. That's a huge increase. Since last year, it's going to reverse, went higher. So now it's in a huge trading range for the prior month. And remember, corn is used for ethanol, feed for animals, huge usage for it. And it's not a good feed for animals, it's just a cheap feed for them. It's not their natural product they should be eating. Some of them should be eating bugs, some of them should be eating grass. Again, the businesses have shareholders to meet and they want to have big profit margins feeding at corn. Look at wheat futures, all-time high. Huge trading range for the month. Broke out of this consolidation range. Yep. And soybean futures, also all-time new high. Small trading range these prior months to break out huge trading range. All since last year. So for these past several years, there's an consolidation, building calls for breakouts as the buyers were loading up down here, and a huge move up for the past year and a half. It just didn't happen overnight. It had many months this was building up calls for it. And lumber. Note, the United States imports most of its lumber from Canada, and then a small percentage from Central and South America, but the majority of it is from Canada. I just showed you the US dollar. As the US dollar declines, you have to convert the US dollar to Canadian dollar. There's an exchange rate fee for that. You're losing out of that. And then the price of lumber is higher. So there are embedded costs that lead to lumber being higher, but all-time high here the past 5 years for lumber. Making homes and other projects more expensive. Live cattle. Yep, we're in cattle now. It's in a consolidation. Huge trading range for the month. Took out the high and low of the prior month, and it's in a tight consolidation. The prior momentum's up. So again, there's a demand for live cattle. We have not taken out the high of last year, which is yellow horizontal line. Feeder cattle. Huge move down. We took out the low of last month and closed below it. Interesting too, because this 150 level has been acting as a demand supply zone several times in the past. As you can see, the prior month, it tested it, rejected it. Here last year, tested it, rejected it, and prior times back here. So technically, If you're managing it, trading it on the faster time frame, good job out of you if you took the trigger in short on that faster time frame. What is the faster time frame? Well, if this is a monthly time frames lower that, weekly, daily, intraday, those are faster time frames. Got it? You'll be tested. Lean hog, all-time high for the past 5 years. Look at this whole year. Almost green for every month except the first month. But the momentum has continued being higher. Strong like bull. Thank you, as always, for spending just a little bit of your time with me. Let me know what you thought about this video. And please let me know what you want to see next. If you got value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel. By going below and clicking on my PayPal link, you can leave a small tip. If you don't want to share financial support, no problem. Just click the like and subscribe.